Welcome to the Everything Financial Radio Show here on the Legacy Radio Network. I'm your host, Dennis Tubbergen, and we are here every week at this time. Glad you tuned in this week. If you're a new listener, welcome. We have a terrific show lined up for you this week. Peter Schiff will be stopping by the studios today for an interview. Peter is the author of The Great Crash Ahead, Strategies for a World Turned Upside Down. Terrific book, so looking forward to getting his perspective. Also, I'll be pointing out to you that no matter what you were told, no matter what you heard on the news regarding the fiscal cliff negotiations, the taxes in 2013 have gone up on some folks other than the wealthy. Why? The Obamacare taxes have kicked in. This might be especially bad news for you if one of your children needs braces. Incidentally, I had a listener email me this week with a terrific observation. He said, watching the Republicans and Democrats debate the fiscal cliff reminded me of two drunks arguing over the bar tab on the Titanic. I could not have said it better myself. So appreciate the emails. If you'd like to email in, you have something you'd like me to share on the air, you can go to everythingfinancialradio.com and just click on the appropriate link there. Also, past guest on the program here, Harry Dent, came out this past week and said that if you study market history, you'll see a definite pattern of bubble crash, bubble crash, bubble crash. I'll share with you what his observations are. And also, to add a little levity, maybe some of you saw the story, but the Smoking Gun, the website, actually published or posted online a letter sent to a Social Security Administration employee who is disrupting the workplace because of his flatulence. I'm not making this up. I'm going to share it with you in the last segment of today's program. You won't believe it, and you won't especially believe what department the letter came from. We are providing our listeners with a lot of new resources this year. You can go to newretirementrules.com, newretirementrules.com. First time I've mentioned this on the air, and learn about a class that we're conducting at the East Beltline campus of Western Michigan University. The class is titled New Retirement Rules. It will be held February 5, 12, and 19, 3 Tuesday nights in a row. There is a cost for the class, but I think you'll find it very interesting. The cost is only $49 to cover the cost of books and handouts. And at the class, we will talk about what has happened historically when policymakers have decided to print money to solve a debt problem, and how has it played out? We think that where we go from here may be predictable, and we're going to share it with you at the class. You can get more information at newretirementrules.com. Also, you can request our brand new report for 2013. The retirement rules have changed. Just go to www.mybest2013.com. Those are the words my best followed by the numbers 2013.com. I am pleased to have back on the program with me Mr. Peter Schiff. Peter Schiff is the CEO of Euro-Pacific Precious Metals. He's also CEO of Euro-Pacific Capital. He's a past guest on the Everything Financial Radio program. He is also the author of the best-selling book, Crash Proof, How to Profit from the Coming Economic Collapse, and also the author of the little book of Bull Moves in Bear Markets, How to Keep Your Portfolio Up When the Market is Down. Peter, welcome back to the program.
Hey, thanks for having me on. Hey, by the way, my most recent book is actually called The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country.
And everything you've written, Peter, I've enjoyed reading very much, so I'd encourage the listeners to get out and pick up a copy. Let me jump in. The Federal Reserve has elected to pursue a policy that has them printing about $85 billion per month in new money to purchase government debt as well as mortgage-backed securities. That's over $1 trillion a year, Peter. What will the ultimate effect be, in your opinion, on the U.S. economy?
Of all this money printing? Well, number one, it's inflation, because that's what they're doing by definition. They're creating inflation. And so what it will do is will impoverish Americans because it will devalue the money that they earn, the money that they've saved, the value of investments that are denominated in dollars. And it's not going to grow the economy. If anything, extra inflation will simply increase the distortions that are currently preventing the economy from growing. So the economy is going to weaken. The cost of living is going to go up. Nothing good is going to come from what the Fed is doing.
You know, Peter, the late economist Herbert Stein once stated that if something cannot go on forever, it will stop. We all know inherently that this money printing cannot go on forever. So my question for you is, how and when does it stop?
Well, it stops when we can't do it anymore, right? I mean, the housing bubble eventually burst. So did the stock market bubble that preceded it, right? Also, it makes me think of Murphy's Law, right? Anything that can go wrong will go wrong. Obviously, there are a lot of things that can go wrong when you're printing all this money. So eventually, one of them will. I think what's going to crack is the value of the dollar on foreign exchange markets once our trading partners tire of propping up our currency, because it costs them a tremendous amount of their own resources to prevent our currency from falling, and it exacts costs on their own economies, namely higher inflation in their countries as they absorb all of ours. So eventually I think our trading partners are going to tire of this game of vendor financing American consumers. The dollar will really start to fall. That's going to push up prices in America and put a lot of downward pressure on the bond market, upward pressure on interest rates, and eventually this whole thing implodes because we're really running the world's greatest Ponzi scheme where we have this enormous debt and we can't pay any of it back. All we can do is borrow more money from the same people who loaned it to us in the first place and just pretend that we're solvent. But when they don't want to play this game anymore, the party's over.
You know, Peter, we've had past guests on the program that have said that obviously debt is deflationary because it tends to take money out of the system. The Fed is trying to combat deflation by printing money. And we have had other guests on the program that have predicted that we will see a hyperinflation. Where do you come down on the whole hyperinflation, inflation, deflation argument or potential?
Well, we have inflation, for sure. I mean, that's what's going on. Whether it ultimately becomes hyperinflation depends on whether we stay on our current policy course. If we continue what we're doing till the nth degree, right, then we will have hyperinflation. But the type of deflationary collapse that some people envision is only possible if the government acts responsibly. What would have to happen in order for you to have a deflationary outcome would be the government would have to basically stop spending, default on the national debt, right, not make the payments, let the bond market implode, let the real estate market collapse, let banks fail, let depositors lose their savings, and do nothing about it. The government would have to let everything unravel and not lift one finger to bail anybody out. Now, I just don't see that that's likely to happen given the nature of our political system. I think they're going to continue to repeat the mistakes that they've made. They're going to try to bail everybody out. They're going to try to inflate their way out of it. And so we might end up having hyperinflation, but certainly before they see the light, there's going to be substantial inflation. The government likes to claim that there's no inflation, that even though we've printed all this money, there's no inflation. And they point to the CPI as proof that there's no inflation. I just wrote an article and I recorded a YouTube video that really blows a hole in that argument, that really shows the CPI for what it is, which is nothing more than a propaganda tool that the government uses to fool the public into believing there's no inflation. And my video points this out. And I just give you one little example of how the government lies. One of the categories that is in the CPI is newspapers and magazines. The government, that's one of the prices that they use. Well, if you actually look at the CPI, according to the CPI, from 1999 to 2012, newspaper and magazine prices are up about 35%. But if you actually look at the prices of newspapers and magazines, I looked at the top 10 circulating newspapers and magazines in the country. During that same time period, their average price is up about 135%. So the actual increase in the price of newspapers and magazines is 3.5 times faster than what the government pretends it is when they calculate the CPI. So how can the CPI number be right if all the numbers are wrong? So the government just does this to pretend there's no inflation. So you can't look at the CPI. You got to look at actual prices, and they're going up, and they're going to go up a lot faster in the future if we continue the current policies.
Well, if you're just joining us, we are chatting with Mr. Peter Schiff, CEO of Euro-Pacific Precious Metals as well as Euro-Pacific Capital. And, Peter, we've got just about 2 minutes left in this segment. Obamacare and the related taxes are just kicking in. How is the U.S. economy going to be affected?
Well, it's going to be affected in a negative way, especially because what Obama has done, or Obamacare will be doing, it will be increasing the cost that we have to pay as a nation for health care. It's not going to make us healthier. We're not going to get better health care. We're probably going to have worse health care, but we're going to pay more money for it. And we're broke. I mean, we need all of our resources in other areas. We can't afford to squander more of our scarce resources on the healthcare industry. But unfortunately, that is what Obamacare is going to result in. In fact, look, they just had news that some Blue Cross, Blue Shield are raising premiums now on the self-employed by over 20%, and people that work from small businesses. I mean, 20% in 1 year.
Well, Peter, we are going to continue our conversation here in the next segment. We certainly appreciate you joining us, and we do have about 30 seconds left in this segment. If somebody did want to learn more about what it is that you do, what would you advise them to do?
Well, they can certainly listen to my daily radio show, the Peter Schiff Show. You can check it out at schiffradio.com, Mondays through Fridays, 10 a.m. noon is live. You can listen delayed anytime you want.
All right, well, we'll continue our conversation with Mr. Peter Schiff in the next segment when Everything Financial Radio returns. Stay with us.